2008, Satoshi Nakamoto invented three things. One was the Bitcoin application, the money, the payment system, a store of value. That application was the first application built on the second invention, the blockchain. The blockchain is a shared, trustworthy infrastructure that lots of different actors can use and be certain that no minority set of actors can cheat the system, basically. The third is crypto economics, which marries the first two. So it enables incentivization of a whole lot of people to run these systems. It enables an application like Bitcoin to be of the people, by the people, and for the people.
Right.
So Ethereum took that second invention, the blockchain, the trustful infrastructure, and enabled software developers to build anything they want to on it, not just the money application.
And explain where we are in that chapter of building incentives for people to use it. And
Sure.
does the price now reflect it?
Yeah, so it's early days still for this technology, but I think the promise of the technology, the promise of building shared infrastructure rather than siloed IT systems, instead of a company building IT systems for themselves on old-style databases, we have this new shared trustworthy infrastructure, and so sectors, value chains like supply chains, whole industries can start to build shared non-redundant infrastructure for themselves.
We had a cryptocurrency expert, not you, a different one, on the show a couple of days ago, and he says he's asked how many cryptocurrencies can there be, and he says hundreds, because the currency is the blockchain, right? A company can have its own blockchain that it uses for customers, et cetera, et cetera. So back to my question to Alan Greenspan a couple of blocks ago, if you have so much supply, doesn't that ultimately hurt the value of Bitcoin? There's just too much of it. The idea is that there's going to be a constrained amount of Bitcoin, right? But if there's lots of cryptocurrencies, then there's no constraint on supply.
Yeah, well, we're already seeing Bitcoin forks, so there are now 3 major Bitcoin systems and 61 million Bitcoins. I think we're undergoing a qualitative change in the nature of these value tokens, where we have hundreds or thousands of state-issued currencies currently, many tens of thousands of shares. We're going to see these tokens become ubiquitous, really. We're going to see different projects issuing their own tokens. Nation states will issue tokens in this technology. It gives us the ability to form projects, to define goals, to issue a token, to fund those, the execution of those goals. So,
to me, that sounds dilutive to the value of Bitcoin.
So when you grow an infrastructure and you grow different activities on that infrastructure, you're essentially creating lots of different value and growth engines. And so I would argue that the more projects that are built on Ethereum, especially because it can support lots of different applications, and that will translate also to Bitcoin, the more we grow this economy, the more in demand those foundational protocol tokens will be.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.